Hey, I want to welcome you to another episode of the Mission Matters Money Podcast, your source for all things money. My name is Adam Torres. You can follow me on Instagram at AskAdamTorres to keep up with my book releases, book tour schedule, signings, all that other good stuff. Always love to connect with you there. And as always, if you'd like to apply to become a co-author of one of my upcoming books, just head on over to the website, missionmatters.com, and click on Become an Author to apply. All right, so today is a very special episode. Today I have on Jeff Mountain, who's the president over at Real Intelligence and has also been published in our most recent release of the Real Estate Edition of Money Matters. This is Volume 2, and Jeff's chapter in this book is called Investing for Rich People. Jeff, first off, congratulations and welcome back to the show.
Thanks, Adam. I really appreciate it. Good to talk to you.
Oh man, so we got a couple things to go over with you today. First off, you just launched this new app. I want to learn more about that. We're going to get into your chapter also, so investing for rich people. But before we do that, I don't want to assume that the audience listening now, all our new listeners, caught your first episode. Start off by telling us a little bit more about Real Intelligence, please.
So Real Intelligence is designed to introduce what we call middle-class millionaires to exceptional financial advisors. These advisors have been dynamic map trained. So dynamic mapping is a new method of financial planning, which is more human-centered. We find that a lot of the traditional methods and software packages are very institutional in nature. So basic things like risk profile questionnaires and systematic rebalancing and taking a fixed percentage withdrawal and retirement, we trash all that stuff. And quite frankly, what we've done is we've created personal benchmarks as opposed to things like the S&P 500 and the Dow, which really shouldn't have a whole lot of meaning to anybody, because who puts 100% of their money in stocks? Generally not too many smart investors do that. So all of this is designed to deliver an amazing experience to these middle-class millionaires. People who don't qualify as middle-class millionaires certainly can still access dynamic mapping through both the app, and we will have very, very shortly a robo which can support their investing needs as well.
Oh, that's awesome. So let's, I think that's a great transition. Let's get into this app that you just launched, man. Tell us more about that.
So think of it this way. When you look at traditional financial planning, it's about 50 pages long. I would say, and I think most advisors who show this to their clients would even agree, 45 of the 50 pages is fluff. There's only about 5 pages, which is generally kind of a spreadsheet output of calculations that are put in front of the investor. And the good news about spreadsheets is it's easy to follow cash flow. You can see the money growing, you can see the money depleting in retirement, but it's almost impossible to enable strategic thought around all of this. Typically, when people lift their heads up from looking at these 5 pages, they look at the advisor and say, well, what do I do now? Which means they didn't really comprehend what they just looked at. So what we've done is we've graphed the output, and the output is the same calculations with the exception of the fact that we assign personal liabilities to each of life's purposes, which helps to create that benchmark I talked about. So if I'm creating a future value calculation of retirement income based on your needs today, then that creates this liability. Then we take your savings, we take an assumed rate of return, we of course include inflation there, and we come up with a projection as to how you might do versus your personal liabilities for each of these purposes. So college funding would be in here. Obviously, mortgage would be a piece of this. Saving to start a small business, paying for your kids' weddings, all these things can be done. And this is a free app that's available to anybody, whether you're an advisor or an investor, from which to begin the conversation.
Man, that's awesome. No, it's exciting stuff, and we'll be sure to leave a link in the show notes so that people that want to download this app can find it and all that good stuff. So we'll get that taken care of for you, Jeff. And now let's get on to the main event. So the book, again, congratulations. It was an honor to publish your work. Let's just get right in. So investing is for rich people. First off, what inspired this chapter?
So it's tongue-in-cheek. Obviously, investing is not just for rich people. I grew up very lower middle class in Virginia Beach, Virginia. And quite frankly, when you're in that environment where people are living paycheck to paycheck with virtually no savings, there is this environment of this is it, this is your life, there is no way out, just accept it, stop trying to be ambitious. And I've noticed that this continues pretty much anywhere where you're dealing with people or communities, I should say, where people just do not have any savings, any accumulated wealth, and their ambition just seems to kind of leave, and it's really sad. For a while, I served on the local board of junior achievement, and I was given the task of doing a class, teaching a class in Bridgeport, Connecticut, which is a pretty urban, lower class area, very, very, very challenged. And it was very apparent to me as the white guy walking into the room that in a suit that I was not connecting with these kids. So we did kind of a fun thing to kind of get them at least involved. We did the whole, would you rather have $1 million or a penny a day doubled every single day for 30 days? And most financial advisors know that story. It's the rule of 72 effectively. And it was fun. They really got into it. But as soon as I got into the meat of the education, they shut down because they didn't really believe that they had any opportunity. So the whole chapter in the book is really about financial literacy, how important it is to understand where you are, where you need to be, how to get there, and know that anybody, if you have some ambition and you try hard and you learn, you get educated, anybody can get out of whatever rut they're currently in.
Yeah, I love it. And in the chapter, you go through this scenario. So you go through a scenario with Amy and Joe. Now, we're not going to go into all of this because first off, we want to leave the audience with a cliffhanger, right? And we want them to go buy the book. So, yeah, we do sell books for everyone listening. But I do want you to give them a flavor of one of the examples you put in there with Amy and Joe. So tell them a little bit more about that scenario and your observations, please.
So the purpose of the Amy and Joe scenario was to help people understand strategic thought around financial planning. So when you do look at those spreadsheets, they tend to separate, they live in silos. So looking at how long it's going to take to pay off your mortgage versus your retirement plans. And what a lot of people have made the mistake of doing over the last, let's call it 20 years, as interest rates continue to fall, is they continue to refinance their home without any real thought as to when that 30-year period is going to come due. Is it going to be before you retire or after you retire? And a lot of people don't even think about that. Well, the reality is the first 5 to 10 years of most people's retirement is one giant party. It's all the vacations you couldn't do when you were working, and now you have the time and money to do it. Go do it. But if you have this mortgage kind of hanging over you during that 5 or 10 year period of time, it potentially could take away that opportunity. So we, of course, give you the opportunity with this dynamic mapping app to play around with it and say, okay, what would it cost me to pay this off a little bit early? How painful would it be? Might I actually use some of my assets to pay it off at the very end? These are all scenarios that you can run really quickly on this app that we're talking about.
No, that it makes perfect sense. And what do you what do you find are some of the common pitfalls that people make in their planning that not only that the app is going to help with, but just in general at Real Intelligence, what you help your clients with in general?
Great question. So I mentioned earlier the idea of a risk profile questionnaire is probably one of the most flawed things in financial planning and, quite frankly, in the investment management world. Every compliance officer from every RIA, broker-dealer is going to require one. I get it. I know why they want it, but the reality is the opinions, and that's what these are just opinions of investors in terms of what their level of risk is, moves so quickly. I mean, think about somebody who might have, in January of 2020, decided they were going to invest. Well, gee, the market was doing great. I have a very high risk tolerance. I can invest all in stocks. And, of course, by the time March and April came around, gee, we saw things drop really dramatically. I know I don't have that same risk tolerance. This is a very much of a snapshot in time. So what we use is a process called aging a portfolio. And what we're basically saying is if I have, let's call it 15, 20 years until retirement or to put my kids through college, the further away from that distribution point I am, the more likely I am to take on a lot of risk. But as I get closer and closer to the distribution point, we have to take risk off the table. and go into a safe place. Now, this requires us to have multiple accounts, right? Not just one or two accounts, but potentially a lot of accounts. If I have 3 kids, I have 3 college savings accounts. I have my qualified retirement account, my non-qualified retirement account. I have an account for my kids' weddings. I have reserve accounts for bear markets, for inflationary periods. These are all important to have. And as long as they are set automatically to reducing risk as we approach the distribution point, nobody should ever be concerned about significant market downturns.
I love it. And Jeff, you already know when you and I get talking money and financial planning and advice, we get talk all day long, but we're about out of time for this episode. But that being said, if somebody's listening to this and they want to learn more about Real Intelligence, what's the best way for them to do it? And also, what's the best way for them to download that app?
So the app is available on either the iTunes or Android App Store. It's a free download. I encourage you, if you're someone who likes to do investments yourself, feel free. Go ahead and knock yourself out. It will be a great tool to help you. It is not a financial plan. Please know that. It's just a calculator, but it's something that'll start the conversation, take care of the heavy lifting as it relates to math. If you're an advisor, I would suggest you take a look at our website, realintelligence360.com, to learn more about how we can help you with your business.
Fantastic, Jeff. Well, hey, it's been great having you back in the show, and congrats again on the new app launch, man. I know that's not an easy thing to do, and you're providing a lot of value there for people. So thank you for that, and of course, the book. So again, really an honor to publish you in that and to publish your work. And to the audience, don't forget, go download that app. We'll make sure we have the link in the show notes, and go pick up the book. We're going to have that link in the show notes for you too, and subscribe to the podcast. Leave me a review. If you're watching this on our YouTube channel, Mission Matters Money, definitely leave some comments on the videos. I'd love to hear what you thought and what kind of projects you're working on. And Jeff, thanks again for coming back on the show.